Welcome to your update on the economic developments and market movements for February 18, 2026. Overnight markets were highly volatile, lacking clear direction amidst a limited flow of fresh economic data. The general absence of significant data releases meant that markets struggled to find a consistent path, contributing to the choppy trading session. Now let's look at how global equities performed during the session. Despite opening firmly in the red due to rising concerns over AI disruption, U.S. equities managed to finish the day on a higher note. Meanwhile, European equities also closed higher, primarily led by strong performance in defensive stocks. Moving on to the fixed income market, here's the overview of bond yields. Overall, bond yields saw little change, with U.S. yields edging slightly higher. In contrast, yields across Europe, including in the U.K., moved marginally lower. The U.K. market saw specific movements related to economic data and the Bank of England. The U.K. released a softer-than-expected labor market reading during the session. This data increased the prospect of further rate cuts from the Bank of England. Let's take a look at how major currencies performed. As a direct result of the labor market news, the pound sold off, falling by as much as 0.6% during the trading day. This pound weakness briefly pushed the US dollar to a session high above 97.50 before it ultimately finished broadly unchanged. The Australian dollar edged slightly higher following the release of the February RBA board minutes. Finally, an update on the key commodity markets. Oil prices experienced a decline amid reports suggesting that the US and Iran had agreed on the principles of a nuclear deal. That wraps up today's market summary. Stay tuned for further updates tomorrow.